Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish engulfing pattern on Friday after the previous session's hammer pattern. All this is taking place right at the bottom of the market and below the lower time, currently 101.60 of the broken but until recently effective January to May 2021 bearish Andrews pitchfork. Now, normally I'd look to retire such a broken pitchfork, however, given the seeming lack of initiative in going lower and what happened when the market popped over the upper time, currently 109.01, back in February and then popped back within that time, I've decided to keep this bearish Andrews pitchfork still on the daily chart. Nearby we have the November 2002 high overhead at 101.70, whilst below we have the interesting 61.8% Fibonacci line at 99.15. We also have below the primary target X for the descending triangle at 99.05, whilst the secondary harder to reach target X1 is down at 96.10, and that's well below the market. So far today, we're beginning to be inspiring as the market is moving up to test the old broken lower time and the November 2002 high. Cable, aka sterling against the US dollar. A bullish thrusting pattern type on Friday and a move up and away from the recent low, though still in between the middle time below, currently 117.55, and the upper time above, currently 120.95, of the late April to late May bearish shift pitchfork. Further above, we have the May 2020 low at 120.73, as well as the paralleling to the upper time short moving average, currently at 120.38. Below the market, we have some light support between 118 even to 114.5, that dates from March 2020. Then the harder to reach target X2 at 115.30 for the recent diamond pattern, before then reaching the October 2016 flash crash low at 114.48. Now, so far today, initially nothing much, but now a recurrence of the market on the upside. It's seemingly not too keen on actually testing this light support again between 118 even and 114.5, and moving up towards the May 2020 low at 120.73, though obviously not reaching it as yet. In between, as I say, we've got that paralleling to the upper time short moving average. Euro sterling. The third bullish white soldier on Friday, and what looks like a clear move up and away from the off-tested supports last week and the week before of the three support levels: the rising medium moving average, currently 84.55, the flatlining long moving average, currently 84.41, and the September 21 to date broken downtrend, currently at 84.28. This last broken downtrend is very interesting, as it is also the upper trend line of a very large falling wedge pattern, currently 84.28 to 81.02. This pattern originated many months ago and is still in operation, but it has fallen into the shadows a little with the rising prominence of some of the more recent diamond patterns. It's also a clear close above the recent resistance of the April 2021 low at 84.70. Now, going back to the falling wedge pattern once more, the potential target X4 for this pattern is quite ambitious. It's up in the 88.65 area off the top of my daily chart, and it's a really big ask. Closer in, we have target X1 in the 87.65 area. This is the harder to reach secondary target for the recent smaller lopsided diamond pattern, plus target X3 in the 88 even area, the harder to reach secondary target for the recent extended diamond pattern. On top of all this, we have the targets for the November 21 to May 22 reverse head and shoulders pattern. Primary target X5 for this reverse head and shoulders pattern will be in the 87.75 area, and a harder to reach secondary target X6 will be in the 88.65 area. The targets X4 and X6 are currently just off the top of the market. Now, all these targets on the upside have been under threat last week and the week before as the market dropped lower, specifically below yet another pattern had been created. This daily chart seems to be full of these patterns. Anyway, this last and latest pattern is a late March to mid-April based large ascending wedge pattern, currently 88.09 to 86.38. And unlike the others, it is a contrary one, a bearish one. This has a primary target in the 84.35 area and a harder to reach seemingly much harder to reach target X7 in the 81.15 area, right off the bottom of my daily chart. Now, the reason I haven't marked the primary target is that it's already been achieved. Thus, if we do carry on seeing a reversion back up, then one could say that the market has reached the primary bearish target below and has been reinvigorated with a bullish incentive enough to revert and try higher. Now, it's an interesting concept, don't you think? Now, so far today, well, a lower open and a moved lower, though most of it is still within Friday's main body, and we've touched and reached, or just about reached, the April 2021 low. US dollar against the Indian rupee. After last Thursday's peak and new all-time high on Friday, last Thursday's peak and all-time high, then on Friday the market made an end-of-the-week bearish harami, closing back below the 100% projected Fibonacci line at 79.81. The market is still between the overhead middle time, currently at 80.34, and the lower time, currently 78.89, of the January to April, early April bullish Andrews pitchfork. Now, this bullish pitchfork has been running the bullish angle of attack here so very successfully since the end of the first quarter. Looking higher, I have the secondary target X1 in the 80.43 area for the recent bullish measured move higher. Now, so far today, a slightly higher open on the 100% projected Fibonacci line for a move down to Friday's low, and then a move back up over the 100% projected Fibonacci line and over to Friday's highs. And there's more than a chance now that we have a key reversal up today, if only just, because the low is matching that on Friday. It will very much depend on where we close. As long as we can close above Thursday's close, then we will have a key reversal up, but we will see. Still plenty of time in there to go. US dollar against the Brazilian real. An indecisive spinning top on Friday, with the close right on the middle time, currently 541.56 of the April to late June bullish Andrews pitchfork. You could argue it as a possible bearish dark cloud cover pattern type, but I wouldn't see it as such. Taking a look at the larger picture, I note the ugly double bottom. Yes, that is what it's called, an ugly double bottom, formed over this year with a potential topside primary target X in the 568.85 area and a harder to reach target X1 off the top of the daily chart in the 584 even area. In the meantime, keep an eye on how the market continues utilizing the bullish Andrews pitchfork, as it's the principal bullish angle of attack of this market. US dollar against the Mexican peso. A second bearish black crow yesterday, almost a bearish closing black Mariboso, but not quite, though it was a follow-on lower from the recent inverted hammer pattern from last week. It was nevertheless a major break below and close under the neckline, currently 2073.19, of the mid-March to early July reverse head and shoulders pattern, as well as the 50% Fibonacci line of the November 21 to March 22 move at 2078.02. Now, I have chosen to retire the late March to late June bullish Andrews pitchfork today and instead finesse and replace it with the shallower bullish shift pitchfork for the same period. The market is in between the middle time overhead, currently at 2062.95, and the lower time below, currently 2011.80. I also note how prices have closed below the following, in addition to the 50% Fibonacci line and neckline previously mentioned. These are the interesting 61.8% Fibonacci line of the July 17 to April 20 move at 2060.62, and a neckline currently 2060 even of the September 21 to February 22 head and shoulders top. Below, in addition to the lower time, we have the long moving average currently at 2041.39, and then also the medium moving average currently 2019.48, and the short medium moving average currently 2010.59. All these are more or less heading sideways. Now, so far today, a significant continuation lower below the flatlining long moving average and loss just pushing down below the rising short moving average, currently 2037.01, though we are still within the bullish shift pitchfork. And thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.